500 billion Zimbabwe dollars. A lot of money, $500 billion. Well, that is how much the banking sector made. That's according to the Reserve Bank of Zimbabwe statistics. This at a time when other sectors of Zimbabwe's economy were either recovering or struggling. It is results season in Zimbabwe and banks are leading the way. First Capital Bank, FCB first, followed by Old Mutual and CABS, the rest publishing soon. First Capital Bank reported an inflation-adjusted profit of 8.4 billion Zimbabwe dollars for the 2022 financial year. That's a dip, though, of 27% from the 11.5 billion Zimbabwe dollars recorded the previous year. Its revenue line increased 42% to $36 billion over the 12-month period, driven by fee and commission income. I'm sure you guessed that. ZTN business correspondent Eben Mabunda brings us the following report.
The principal business of a bank is lending. This allows the financial institution to generate interest income, also known as funded income. A bank may also generate revenue through other means, for example, fees and commissions on transactions held by the bank in what is known as funded income. In most markets, banks generate the majority of their funds through lending activities, but in Zimbabwe, the matrix has been inverted over the last few years.
Non-funded income continues to dominate the revenue lines for local banks, and First Capital Bank is no exception. In the 2022 financial year, the bank had its non-funded income contribute 65.5% of its revenue line.
When you look at fees and commissions, during the period, we actually posted an increase of 25%. And that portion of the income in our book contributes about 33% of the total income. Then FX and investment income is contributing 32%.
That means they hike their fees, point of sale charges, transaction charges, your bank levies, your monthly, book charges. So that's where they are getting most of their income. Why? Because the operating environment.
The bottom line for First Capital Bank took a knock after factoring in revaluation adjustments.
We post a profit after tax of some 8.4 billion compared to 11.6 billion in 2021 on account of the revaluation of our investment portfolio in 2022 compared to 2021.
Now, according to the Reserve Bank of Zimbabwe, non-interest income made up 67.8% of total incomes for local banks in 2022. Of that figure, revaluation gains on investment properties contributed 63%, with fees and commissions taking up 29%.
This has been the story, that's worrying a lot of analysts in seeing that banks are generating more of non-interest income, just given the operating environment they're in. But then, the one positive thing that I'm taking from this is that even though the economy is pressing banks towards just relying on non-interest income, but we've seen a good growth in net interest income for First Capital Bank for the period under review.
This is symptomatic of Zimbabwe's volatile inflation, which peaked at 285% in August of 2022, forcing authorities to hike interest rates.
The primary focus should be on how banks make money. Banks make money from interest. So now, if you lend money, to producers, the business sector, for you to be able to make money, it means there has to be a stable economic environment. There needs to be policy consistency. There also needs to be positive, interest rates. So when inflation is running at 300%, you cannot have a situation where interest is at 200%. It means it's a loss.
Recent trends show a growth in transitory deposits, with most banks reflecting low loan-to-deposit ratios and a strong preference for US dollar loans.
The environment is not ideal, That's why most of the money is just transitory, which is helping them just get some of the, it's helping the banks grow some of their the fees that they're collecting from customers.
Could there be changes in the 2023 financial year?
That challenging environment continues into 2023. First quarter is looking tough as we look at the continuing inflation, and we look at the impact of that on our cost base, and we look at the growth in our revenue in a tightening dollar liquidity environment.
With persisting inflation and currency volatility, Zimbabwean banks will likely continue to take cover under non-funded revenue lines. From Harare, Eben Mabunda for ZTN Prime.
Now, the same briefing we also heard from the MD of FCB, who said that they may be looking, or they will be listing on the Vic Falls Stock Exchange to raise additional capital. But look, I just want to chat to you about this non-interest income and interest income conversation. On the one side, banks pay 0 interest rates to your money, particularly if you're holding a current account. And only on some savings products do they pay possibly 10 to 15%. Now, on the other side, they lend at 150%, if not higher, most of their book. And of course, if they lend in US dollars, they lend at around 10% on average. Now, every transaction that you can think of, from asking for your account balance to monthly fixed fees, ledger fees, cash fees, paying for statements, transfer fees, the list goes on and on, are all charged by banks to their customers. Fees are also charged on US denominated FCA accounts. Just put $100 into an FCA account. Don't touch it and see how long that money lasts. It'll just be a couple of months before it's all gone in fees and commissions. So the question is, of course, are the fees and commissions charged on customers too high? Remember that number? Over 65% of most banks' profits is in non-interest income, which are fees, commissions, and other charges. Look, no one faults the bank for charging fees and commissions. They have software to maintain, even they have to upgrade it periodically. They also have staff costs, working expenses. But again, are they balanced, these fees, or are they just taking advantage of captive clients? Now, should banks be making, on average, as I said, over 65% of their income on non-interest income? Some are even higher than that. In fact, some numbers coming out could be above 70%. Or should they make most of their money on traditional banking practices, which is lending money to clients? I think it's time that this debate was had in Zimbabwe. Banks need to have their say, explain their position, and customers need to weigh in too. Remember that number? 500 billion Zimbabwe dollars profit? Well, some would say that even in a struggling economy, banks are making good money. And critics say this is on the back of clients who are being shortchanged. Well, I wait to hear from the bank and, of course, from you.